Hey everyone, welcome back to Corporate Decoder, the place where we help you read between the financial lines and uncover the real story behind the numbers. And folks, today we've got a doozy, a company that's basically saying they're going to sell a whole lot of stock and they've got a plan to do it, so buckle up. Before we dive in, make sure you're subscribed because we break down these complex filings so you don't have to and you can stay ahead of the curve. And hey, if you love getting these insights, join our Discord community linked right down below in the description. So we're looking at Mill City Ventures III Ltd, a company trading on the Nasdaq under the ticker symbol MCVT. And this report is all about a big move they're making to raise capital through selling their own stock. At its core, this filing is about a deal Mill City Ventures has struck with a company called AGP Alliance Global Partners to essentially give them the option to buy up to $500 million worth of Mill City's stock. Now, this isn't a done deal where they're forced to sell all of it. Instead, Mill City can decide when and how much they want to sell up to that $500 million limit. This phrase here is super important. It means Mill City has the driver's seat. They control when they tap into this agreement with Alliance Global Partners. Think of it like a lifeline they can use, but they aren't forced to. The deal has a cap though. They can't sell so much stock that it messes with their ownership structure to a degree that requires special shareholder approval. This exchange cap is set at 19.99% of their outstanding shares, unless they get the green light from their shareholders to sell more. This is a standard move to avoid triggering certain regulations or to keep the existing shareholders' stake from being overly diluted without their consent. Now for the pricing, here's where it gets interesting. Mill City can sell their shares to Alliance Global Partners at a discount. Specifically, it's tied to the average trading price of their stock over a certain period, but with a 5% haircut. So if their stock is trading at an average of $10, Alliance Global Partners to buy the stock, and is pretty common in these types of agreements. This agreement isn't forever. It has a lifespan of 1 year or until the total commitment amount of $500 million is reached, whichever comes first. This keeps the deal fresh and prevents it from lingering indefinitely. The money raised from selling these shares will be used for general corporate purposes. While the filing doesn't detail specific projects, it's understood that this capital is intended to fuel the company's growth or operational needs. The exact use will be detailed in further filings related to the stock issuance, where they'll have to be more specific about how the money is spent. This section tells us how they're legally allowed to sell these shares. They're using an exemption from full public registration. This usually means the buyers are considered sophisticated investors who don't need the same level of disclosure as the general public gets in a full IPO, for example. It's a quicker way to raise funds from specific parties. Alongside the purchase agreement, there's also a registration rights agreement. This is crucial because it means Mill City has committed to filing the necessary paperwork with the Securities and Exchange Commission to register these shares. Essentially, they make it legal for Alliance Global Partners to eventually resell these shares to the public if they choose to. They have a tight deadline to get this registration statement filed and approved, which shows they're serious about facilitating the resale of these shares. This part of the report just reiterates what we've discussed in item 1.0. One, they are indeed selling equity securities. It's a confirmation that the agreement we just talked about involves the sale of stock. This is a standard legal disclaimer. Even though they're announcing a deal to sell stock, this report itself isn't an invitation for just anyone to buy their shares. It's a formal notification of a corporate action. This section mentions a press release was issued on August 1st to announce this purchase agreement. This is how companies typically communicate significant news to the public and investors. The press release is attached as an exhibit for anyone who wants to read the company's official announcement. This and the following exhibits are the actual legal documents outlining the nitty-gritty details of the purchase agreement and the registration rights agreement. These are the contracts themselves binding the parties involved. Now, looking at this filing from a broader perspective, Mill City Ventures III Ltd is actively positioning itself for growth or to manage its finances by securing a substantial potential funding stream. The key takeaway is their proactive approach to capital raising. They're not waiting for a crisis, they're setting up a facility that gives them flexibility. One of the strengths here is the control Mill City retains. They decide when to use this agreement, making it a tool rather than a burden. The 5% discount on the VWAP is also a reasonable incentive for the investor, and while it might seem like a loss for current shareholders selling at a discount, it allows the company to secure funds that might otherwise be unavailable or more expensive to obtain. A notable risk, of course, is share dilution. If they end up selling a significant portion of their stock At a discount, the value of existing shares could decrease. However, the 19.99% cap before requiring shareholder approval helps to manage this risk. Also, the success of this strategy hinges on the company using the raised capital effectively. If they invest it wisely, it could lead to significant expansion and ultimately benefit all shareholders. If not, the dilution might outweigh the benefits. Overall, Mill City Ventures is showing a commitment to securing financial flexibility. The agreement itself is a strategic move to ensure they have resources available as needed. Whether this translates into massive growth or just keeps the lights on remains to be seen, but they've certainly put a significant financial backstop in place. What's your take on this massive stock sale facility? Let us know your thoughts in the comments below. If you found this breakdown useful, hit that like button and subscribe to Corporate Decoder for more insights into the world of finance. And don't forget to join our awesome Discord community linked in the description. It's a great place to connect and discuss. Thanks for watching, and we'll see you in the next one.